Good morning. What's up, everybody? Happy Wednesday. Let's do this thing. What's up? What's up? What's up? Good morning. As ICT would say, it is a good morning. It's a great morning. What's up? What's up? Good morning, good morning, good morning. Let's do this thing. We're going to get started in just a few minutes. Let everybody get in here first. Still got some time before the opening bell. No news this morning, but we do have 2 p.m. FOMC meeting minutes. So I'm expecting cleaner price action in the afternoon for the most part. Good morning. Let's see. Okay. There we go. What's up? I don't plan on trading the PM session or final hour macro. I haven't traded the final hour macro in a while. I only trade the PM session if I need to recoup some losses from the morning. But for the most part, I like to be done in the AM and not even have to look at the PM session. Public stream today. Let me double check this economic calendar because, sometimes they like to add news last minute. Let's see. Make sure. Yeah, so still no news today other than 2 p.m. And then tomorrow we have our only morning news driver at 8:30. So that's really the day that I'm looking to engage. Let's go. What time we got? 8:18. We'll get started in a few minutes. I want to do all the higher time frame analysis and all that while all the people are in here so everybody can see the levels that I have marked up and whatnot. Now, today's public stream, FOMC in the PM. Price action has been pretty garbage the last 2 days, so I'm not trading today, on camera at least. I gotta say that now. Yesterday's lunch trade, mitigate previous losses. We're all looking for, well, let me not say that. I was looking for longs all day yesterday. Those triple tops that everybody was looking at, the triple highs, was just way too obvious as a draw. Supposedly there was some Trump stuff going on that was causing the markets to be a little willy wonky, but I don't know what that was about. It took a few more chances than I would have liked to reach that buy side, but once it did it, then all the losses recouped, and then there it is. Let's see, 9:20. We'll get started in just a couple more minutes. Let everybody get in here first. Then we'll break down the higher time frame and do our top-down analysis, and then we'll go from there. In the meantime, I'm gonna grab my water. You recoup my losses from yesterday? Yes. I finished yesterday slightly green. Swing trading strategy? No. I don't swing trade. My personality isn't really fit for swing trading, so I don't study it. But swing trading is the same as trading off a 15-second. The fair value gaps are the same, order blocks are the same, breakers are the same. It just takes longer for the moves to pan out, and you won't get a setup, every single session. So it's the same exact thing we do on a 1-minute chart, just apply it to an hourly or 4-hour, whatever you like. Get started in about 30 seconds here. I don't want to lie. You had a 30% win rate while live trading. Yeah, the past few weeks have been hard for me. Not gonna lie. I haven't had any red weeks yet though. Made $6,000 last month. Currently up. I think I'm up 500 this week. I think price action has been a little bit more harder, especially like Mondays, Tuesdays price action. Last week was This week's price action a little bit more difficult. Manipulation I feel like is higher, so it's definitely been harder. I definitely had to do more work in the lunch hour PM session to recoup whatever it is I lost. But it's just been a theme of the week, and I already know that summer, like we're in summer, that's why I titled the live stream Summer Price Action. Summer price action is harder to trade. Like statistically speaking, it's my harder months, the months where I don't perform the best because it's summer. I think the best price action is like in the fall. And my losses are small. My wins are huge. I'll lose maybe $300, $400, and my wins are $1,200, $1,500. Yesterday as example. So here we go. Let's do this thing. Hopefully everybody's having a great morning. Hopefully y'all are feeling good, looking good, smelling good, dressed good. Let's do this. So NASDAQ here. Let's clear all this off. We're going to start off from a weekly chart. Let me get my monitor set up so I can have all my different time frames. There we go. All right. So all-time highs. We're having an inside trading week still. Haven't taken out previous week's high or low. Kind of just bouncing around. That could change today with our FOMC. It's not the regular FOMC like federal funds rate, but it's FOMC meeting minutes, which is usually not as violent as your typical FOMC. So something to keep in mind. But weekly chart here, kind of just hanging around. Let's go straight to a daily. We've been watching this order block for the past few days. The opening price closed past it here, but yesterday, today, getting a little bit of movement. So we have previous day's high in the crosshairs. Now, I think it is possible we can have a trending day. I think we can have a really bullish day. We had an inside day yesterday, and the rule of thumb, whenever we have an inside trading day like we did yesterday, we couldn't take out Monday's high or Monday's low. The next day or the very next one, expect a large range explosive day. Okay, so we had an inside day yesterday. That's how we closed. Today's trading, should we take out the high? I think we can possibly see large expansion and continuation. If we don't get that, then that's something that I'll be expecting tomorrow. So that's just a general rule of thumb. We do have our current new week opening gap here as well as a draw, which is that candle's closed. This candle's open. Make sure settlement's turned off if you're drawing your new week opening gap on the daily chart. So that's just in the crosshairs along with previous day's high. So let's go ahead and jump straight to a 15-minute chart. And you kind of already saw the lipstick I had on here earlier. Inversion, fair value gap. Working it to death here. Discord members and YouTube community should already know the rules whenever it comes to having two fair value gaps stacked on top of each other. You want to see this one offer support. You want to see this one stay open. If you looked at the trade I took yesterday during lunch, this was also the logic behind it. Fair value gap, breakaway gap. Relative equal highs, again, previous day's highs here in the crosshairs. And then as long as we continue to look bullish, my targeting would just be quadrants of the new week opening gap. And obviously buy side here, kind of ignoring this wick, focusing on the bodies. This is something we've been doing, or this is something that I like to do. Whenever we have a lot of wicks like that, I like to focus on the bodies. So this here is way too smooth. The wicks do the damage, but the bodies, the bulk of the volume lies in them, and they tell the story. So that's a little too smooth for me. That's something I'm focusing on. And then let's go to a 5-minute chart. We got about 4 minutes until the open. So this is a day where I wouldn't necessarily expect a repricing towards the midnight open because we have to have narrative first. So midnight opening here. Now, could it happen? Absolutely. But if we're trading near all-time high territory and I'm expecting a large range day because yesterday was inside trading day, there are certain scenarios where I wouldn't expect us to trade all the way back down to the midnight open. Because sometimes I would take longs here and then people ask me, but your model says you're trading towards the midnight open. Well, the narrative is we're bullish and we're likely to take out previous day's high. And in my eyes, it's possible for us to see continuation through that. So we're going to stay tight here for a little bit. We're going to stay on to the 9:30 open on a 5-minute chart, and then we're going to take a look at our regular trading hours gap, which I'm sure is a premium gap opening. We're going to open higher than where we closed yesterday. So I'm going to sit tight for 2.5 minutes and see what we get. Let's take a quick glance at, what's up, Jason? Glad to have you. Let's take a quick glance at S&P. Pretty much looking the same. This is micro. S&P, Dow, all looking pretty bullish. DXY. Sell side in the crosshairs. Let's see. The Sibia marked out. Yes, if you're talking about this inversion, fair value gap here. Right there. All right, opening bell in about 60 seconds. Let's go ahead and mark previous day's high, which is likely to get tagged soon there. Bro's always tape reading is strange because he can't take winning trades. We just caught a win on Monday. What are you talking about, champ? We just caught a nice win on Monday in trash price action. Yesterday, 2 losses. Recoup those later in the lunch hour. Let's get this dude out the chat. He trolls too hard. It's always the ones who types in full caps. You gotta get him out of here. There we go. No negativity allowed. So previous day's highs hit, opening bell in 5 seconds. So one thing that I'm making note of, we are in a premium, so here we go. In this scenario, this is a day where I would need us to work into a discount before I consider going long. Now, because I'm expecting kind of more of a trending bullish day, I may not get that. But whenever we open gap higher at 9:30 like this and we start running immediately higher, for the most part, I don't like being a part of the group that chases that. We have buy side, okay, all above here. Whenever we open above the buy side and trade 1 tick, all those buy stops are engaged, so those orders are live, they're hot. So my thought process is any breakout traders who are looking to go long above the buy side, once we open at 9:30 and gap higher, breakout traders are tripped in going long. So if we did want to go higher for the session, I would at least want us to come back down, repricing some of the opening range gap, punish those who are going breakout long, give smart money a chance to buy at discount prices, and then work higher. But if we see something such as we open at 9:30 and then it's just one directional, then that's a day that I would sit on the sidelines and I wouldn't want anything to do with it. You lost a lot of money in your stream. I didn't lose more than 1%. on the stream yesterday, or like 1.2%. It's very light. A lot of money for me is like 3.5%, 4% is pushing it, but 1.5% or less than that, that's not a lot of money. That's really light for my account balance. It's really light. I was able to recoup that with one trade yesterday. Risk is always managed. A lot of haters this morning. I love it. It's good. Good stuff. What time windows analyze buy side and sell side? It would be more educational if you were transparent. Those losses were shared on Twitter, people. I shared both losses on Twitter and in Discord. They're in there. They're in there. If you don't follow me on Twitter, go follow. I share my losses there every morning. I promise you. It's in there. All right. So take a quick glance at S&P. Same thing, Dow, same thing. So if I was engaging today, anything long from here, I wouldn't be interested in. So if I have a bullish bias, what I prefer is for us to at least work the opening range gap. It doesn't have to come down to consequent encroachment, but we can work the upper quadrant, something of that sort. But buying anything all the way up here, to me, is just too rich of a premium. It's too expensive. That's like going to your local Kroger and buying a single Granny Smith apple for $7. It just doesn't make sense. It doesn't make sense. Not at this price level. Pocket watching. Again, no news today, so I'm not expecting any sudden volatility injections. Is really just what we have in price action. You must be popping. Oh yeah, we popping. We almost had 20K subs, so you know what comes with that. Which, forever grateful for y'all, man. 20K around the corner is insane. Like, that's 20,000 people. Like, that's a lot of people. That's a lot of people. That's crazy. Love all y'all, man. All y'all. Especially the ones who've been around since like 5K, 10K subs. I think I have over like 300 videos on that channel. Y'all are family, man. All right, so let's zoom out a little bit because we already tagged previous day's high. Buy side here, it's just a few points away. In case NASDAQ wants to get really animated, let's go ahead and annotate this. And then again, on the daily chart, this is when narrative is so important, because if you're a pattern trader, if you only focus on trading models, this is where you could really hurt yourself. Yesterday, inside trading day, weekly forecast for this week is bullish. We're expecting all-time highs this week. We're not trying to predict tops and say we're reversing. So if we close with the inside day yesterday, the next day, which is today, or the very next day after that, you can expect a large range expansion, expect a large range day. That's something that ICT teaches. So if we have all those factors in play, would I want to see a repricing to the midnight open? Not necessarily. Can it happen? Yes, but it's not as likely given everything that's happening on the daily chart. All right, NASDAQ is running. We're going to stay on a 5-minute chart because I want to zoom out a little bit. Let's go to a 15-minute. Since 1K subs, Jay Green, you're a real one. 1K, that was a long time ago. Probably over a year ago. One mistake you keep repeating early in your trading journey: trying to rush my progress. That's the main thing I tell people. Relative equal highs taken. So this is a 15-minute chart, obviously, but likely to form a fair value gap here. Would want that to act as a breakaway gap. We have this consolidation stalling before the opening bell. That first fair value gap to lead the consolidation, I want to see that stay open. And then we have the upper half, we have consequent encroachment of our current new week opening gap that could be used as support along with the lower quadrant. But anything beneath that, then to me that is kind of suspect because I would want this to stay open. But one mistake in my trading journey was just rushing, trying to get funded too fast, too quick when I wasn't ready, trying to get payouts when I didn't know what I was doing, continuing to pay for resets, and failing a challenge, buying a reset, failing a challenge, buying a reset, failing a challenge, buying 2 more accounts, just throwing money down the drain because I was in a rush and I didn't know what I was doing. I didn't give myself time to develop, and I lost a lot of money doing that. I think if I would have been more patient in my development and gave myself time to improve and actually learn, I would have saved so much money. And by the time I was actually ready to go for a prop firm challenge, it would have been a walk in the park. But I had nobody telling me to slow down. Let's go back to a 1-minute chart. NASDAQ really expanding during the opening range. Dow, S&P. I'll be keeping an eye on those 2 other averages to see if they continue to move in tandem. If we have something like Dow starts breaking lower aggressively, or if S&P starts slowing down and showing signs of weakness, then I'll be looking for NASDAQ to possibly do the same. But as long as all 3 averages are looking pretty bullish, not interested in trying to predict the top. Dollars being held in consolidation. All those losses made you who you are. That's it. Part of the reason why I feel like I'm so disciplined and patient, and I'm fine missing moves. I'm fine with no trade days or like losses, just being numb to losses. Part of that comes from, like, I used to be a gambler. Like, the pain of losing a trade with 0.5% risk is nowhere near the pain of blowing your 3rd funded account or 3rd prop firm challenge in a week's time span. So, I mean, I got trading trauma, trading baggage just like everybody else. But once you overcome it, then I think it, in one way, becomes a strength. Like, there's no urge for me to go on tilt, or there's no urge for me to revenge trade or gamble. And experience has a role in it as well. Like, when you see the same status repeat over and over again, it's easy for you to sit on your hands because you know it's likely to happen again. But if you're kind of new and you don't have a lot of experience under your belt and you miss a good setup, you're more prone to get emotional because in your mind, you haven't seen a setup like that pan out enough times. If I miss a setup, it's like, okay, that was a nice little win that I could have taken, but I didn't take it. That's fine. It's likely to happen again tomorrow or later this week or next week. So just knowing that the markets are rigged and it's algorithmic and it's not buying and selling pressure, these things are controlled to the tick, it gives you peace of mind because it can't ever change. So NASDAQ almost trading to the high of our current new week opening gap. So one thing I'll be observing, if we trade to the high end of it, let's go to a 5-minute chart. I'll be watching to see if we want to find support in the upper half. So I treat new week opening gaps, new day opening gaps as any other PD array as far as when I'm bullish. A closure above it, we'll just say on a 5-minute basis. What I want to see is revisit the lower half so we can find support in the upper quadrant, which would be about right here. We have a fair value gap. We could find support at midpoint, but anything lower than that, then I think that's too deep of a retracement and we're just likely to take out the sell side here. So two things I'm looking for: do we close above the high of our current new week opening gap? And then do we remain in the upper half if we do so? If you want to get really specific, then you can run your fib, get the upper quadrant. But I would need to see a closure above the high. That's quote unquote confirmation. New week opening gap marked correctly. It should be. Let me make sure. Let's go to a 15-minute. Oh, is it marked correctly? Let me see. What's today? What's Monday? Today's the 9th. Oh, that's not accurate because it's here, isn't it? Let me double check. Sunday, this is our current. Oh, did I mark that wrong? Let me see. That's right? Okay, so this is wrong. Let me adjust this. My bad. Let me fix this real quick. Get the right measurements. Okay, so we're already above our current new week opening. That's right, bank holiday. It was a bank holiday, so the new week opening gap is off. 4th of July on Friday. So, okay, we'll take off this new week opening gap because we're clearly above it. Buy side here is in the crosshairs. And is that current all-time highs? That is. So anything above here, then we enter no man's land. I forgot with Friday being a bank holiday with the early closure, the new week opening gap is thrown off. So thank you for whoever caught that in the chat room, but this is your correct new week opening gap. All right, let's go back to a 1-minute chart. Anyway, you take shorts. No, we're not looking for shorts. We're not trying to be a hero and predict the tops. I think all-time highs is the draw. Just let it run. We had a saying in Discord a long time ago. I want to see who remembers, but we used to say that there's two things we don't chase. Who remembers what they are? I want to see who the real day ones are. Who's been in here for a while? that was not the verbiage that I use, but close enough. Close enough. All right, we got a lot of day ones in here. That's what's up. Now, I did not say hose. He added that little sprinkle of flair in there. That was not my verbiage. That was not what I had said. He's not wrong, but that's not the verbiage I chose to use at the time. When we're above all-time highs, how can we trade? There's no PD rates or target. A lot of people get that kind of confused. Well, for one, if we're at all-time highs, like literally, if we're trading above this high, and if we're this expanded on the day, so this is my all-time high protocol. If there's no price action looking left, like right now, we clearly have buy side and whatnot, so you have something to target. But once we get above, where are we at? Once we get above current all-time highs and we're in this region, either I'm not interested in trading. It depends where we are on the day. Like clearly we're in a really rich premium. We've already expanded so much pre-market. I wouldn't be interested in trading that day. But if we have our midnight opening price and our opening price is here for whatnot, for an example, I will lower my risk and I'm targeting bread and butter setups or standard deviations. If you look around this time last year, or just search my channel, just look up fib projections, standard deviations, or whatever. I have videos where around this time last year, or whenever we were trading at all-time highs, I was using fibs for targeting because we don't have buy side or anything to reach for, obviously. So you can either do that, or if you want to keep it simple, just go for a 2-to-1 risk to reward, leave a runner. I would do that as well last year when we were trading at all-time highs. 2-to-1 bread and butter setup, that's really easy to get. And then if you feel like you're going to have FOMO, you don't want to miss out on the move because you don't know how high we're trading to all-time highs, get your 2-to-1 and then leave a micro on or two for a runner. See how much you can capture that way. But then you have to remember, like, just because we're trading at all-time highs, you still have liquidity from Asia. You have liquidity from London. You have liquidity from the pre-market. Like, those liquidity pools will always be there. It won't always be something like this expanded, right? So we'll be trading an all-time high territory on the daily chart, but there's going to be liquidity formed overnight pre-market, and you can use that. So there it is. Missed over 100 handles. What do you do in this case? Just close the charts. Close your charts to just do what we're doing. Tape read. And then change your verbiage. You didn't miss anything. Like when traders say, I missed that trade. I missed out. You didn't miss anything. You just weren't in the trade. It's just a trade that you weren't in. So just stay sideline, tape read. Like old me, I would be trying to buy up here. Like a year ago, the Tremaine that used to blow dozens of FTMO accounts in the span of a month. Like I would be looking to buy fair value gaps, order blocks, anything up here, try to get a little piece. And then what would happen? We'd get a deeper retracement, hit my stop, go higher. And at some point I was like, okay, I got to learn to stay on the sidelines if I didn't get in the move earlier. And I was able to save a lot of money that way. But if you look at this and say, man, I missed it. No, you didn't. No, you didn't. That's not your trade. You didn't miss it. You just didn't engage. So show up tomorrow. Show up the next day. Show up next week. Next quarter. Next year. Oh my goodness. The spam is crazy. I'm going to have to get moderators soon. Probably next year. I'm going to get mods next year. The channel's growing, so we got more people in the chat. Now, you don't have to take stopped out 730 short. Mistake, we're bullish. You don't have to miss out on the whole trading day. If you still want to trade, look for a setup, you can always come back during lunch or the PM session or the final hour macro. But if we're just talking for this session, this is a period where I'll just sit still. But there would be nothing for me to do in here. Lunch starts at 11:30. Lunch is 11:30 to 1:30. Let's zoom in a little bit. There's really nothing to analyze in price action. It's just all-time highs and straight upwards delivery. Mentioned earlier, whenever we have two fair value gaps stacked on top of each other, general rule of thumb, you want to see the upper one act as support, and you want to see this one stay open. That's just the general rule of thumb. I'm looking for that every time. That's not a buy. That's not a signal, because I would try to buy that stuff in the past, get cooked every time. Would a jitter swing even be considered to take a short? I'm not looking for any shorts. If I was trading, I'm not looking for anything going lower. I don't care with today's narrative. I don't care if we're above the midnight open and the 8:30 open. I don't care if we gapped higher. This is a day where I wouldn't be interested in anything going short. At least not until all-time highs are taken. And then for me to consider shorts, I would have to see so much in the chart. I would need to see ES and Dow showing weakness. I would need to see strong structure to the downside, strong displacement to the downside on NASDAQ, possibly dollar index showing signs of bullishness. Like I would need way more confluences to consider shorts on a day like today. But I'm not interested in trying to stop a bullet per se. I saw me and one of my mentees, we had a meeting a couple of days ago, and we're talking about the importance of narrative. A lot of people focus on the models and the patterns and, entries. And we're talking about why ICT concepts is so good, but a lot of people get it kind of mixed up. When people study ICT concepts, the main thing that they're focused on is the entries. They want to get entries like ICT. They want to, no drawdown sniper entry, and they want to learn all the PD arrays, which is fine. But we're talking about how what makes ICT concepts so good is that he teaches you narrative. Why should price do this? Why should price not do that? When is it allowed to do this? When can you expect that? That is what makes ICT concepts so effective and so good. The PD arrays are just what you can use to engage. That's not really that important. You can get in the market by flipping a quarter and make money. That's just clicking a button. But none of that stuff matters if you don't have the narrative as to why the market should do something or why it shouldn't do something. And we're just talking about how a lot of people are focused on the wrong things, entries and models and, whatnot. But they're missing out on narrative because none of those models are going to work. None of those entry techniques are going to work if you don't know why the market should or shouldn't do something. Amen. Let's take a look at S&P, Dow. Okay, so this is where I'm keeping a close eye on Dow. If Dow does something like get a little bit more displacement lower, leave that fair value gap open, that doesn't immediately shift me to a bearish bias, but that raises eyebrows, as I like to say, that grabs my attention. So if Dow starts to roll over, and if S&P starts showing signs of weakness as well, and NASDAQ runs out all-time highs, then I'll be possibly interested in something going lower. But I need a little bit more. Dollar. I forgot I don't have dollar in my watch list, so I have to remind myself. It's just consolidating. I have to remind myself if dollar starts working higher as well. For those who don't know, normally I like dollar index and NASDAQ, really dollar index and all the indices to move inversely. Excuse me. So if dollar index is working higher, I would like to see lower prices in NASDAQ and vice versa. They have an inverse relationship. And if you get real advanced, if you really want to do the most, you can look at treasury bonds. Just swap equal highs. That's something you can watch. Okay, so Dow, buy side taken. Watch and see if it gets weak. S&P, think it just fell short of that buy side. Let me see. Oh, tagged it by a few ticks or so. So I'll be keeping my eye on that. See if S&P wants to rotate lower. And back to see how Dow's kind of leading the way. This is when I watch NASDAQ closely to see if it wants to follow suit. Why do you not trade Dow? Dow's too. Well, I can't. Lately, Dow has been moving really nice. Like, if I'm expecting higher prices in NASDAQ, and it's kind of like slowing down, like NASDAQ's just not willing to move, every time I check Dow, it's doing exactly what I would want NASDAQ to do. Like, if I'm bullish on NASDAQ and it's just consolidating, I'll take a look at Dow, and it's just tearing higher. But that doesn't entice me to want to switch the market. Like, I'd rather trade NASDAQ all day, every day. But all the pairs and all the markets have their days. Like, there's days where NQ is the better market to trade and Dow will look garbage. We call it dirty 30 for a reason. There's times where ES would be the cleaner market, the stronger market, and NASDAQ would be trash. But I'm not trying to flip-flop in between, you know. I'll just stick with one. Oh, I heard about that terrorist announcement on 7 countries. Is there a time on that? I saw that on Twitter last night that Trump is announcing some big stuff this morning, but I didn't see a time. So it's like that kind of stuff, even though we don't have news drivers on the economic calendar, is that kind of stuff that can still act as a news driver. It's just a little bit more unpredictable as far as the timing and whatnot. But for that session, you can expect some stuff to go down. August 1st is when it happens, but he was speaking on it today. It said this morning he was talking about it. All right, so I'm gonna do a side by side. Put Dow over here. Just for a little bit. All right, so I'm watching Dow. If it leaves its fair value gaps open, that's bearish order flow. And then if NASDAQ takes all-time highs, I'll be observing its reaction. Because at this point in time, I would just want it to run all-time highs before even considering doing what Dow is doing. Just clean this up first. S&P. I want to see NASDAQ really spike up there. I don't want it to just take out all-time highs by a little tick. Really get up there. Dow's looking pretty heavy for right now. Could be foreshadowing. Are you playing with cards? Yeah, I got cards that I like to shuffle. I don't like being at my desk too long, but having something to how do I say it without it sounding wrong? Having something to keep me busy, keep my hands busy. Pause. I have cards. I need to get some more desk objects, but I have some cards. I have poker chips. I have a Rubik's Cube that I haven't solved since I bought it, so it just sits there collecting dust. And I have a little like fidget cube. Yeah, fidget with, there you go. I couldn't find the right verbiage. Cards and poker chips, that's what you need. So right now, a little decoupled, Dow clearly pretty heavy. NASDAQ posting all-time highs still. S&P, I'll be watching ES to see if it wants to give up the ghost and break lower. Bro, the Rubik's Cube, I mean, I have people on the Discord tell me how to solve the thing, like there's a pattern or whatever. I have not solved it. I mean, I'm really about to just take the stickers off and put them where I want them and just call it solved. You know, think smarter, not harder, as they say. Work smarter, not harder. ASMR, free of charge. I'm a jack of all trades. Geek A, what's up, bro? You trading today? Hopefully I'm saying that right, Geek A. If I'm not saying that right, I'm sorry. Yeah, target is met right at the open. Charts off, yeah. I'm with you, bro. I'm not trading either. On camera, I gotta say that now. Let me address that real quick. Listen, I was gonna say this for a private stream, but I gotta call everybody into the office real quick. When I take trades on stream, best believe I'm trying to win on stream. I do not like trading the lunch hour. I don't like trading during the PM session. I don't even like being on the charts after like 11 a.m. I want to be done with my trading day when I get off stream. Now, if there's an instance where I take, let's say, a loss or two on stream, my bills don't go away because I took losses. Okay, I'm a full-time trader for real. Like, I pay bills with the money that I make from the market. So if I still have equity, like I set myself a daily loss limit. If I take 2 losses, but I still have some equity to work with in my personal daily loss limit, and I see something forming in the PM session or final hour macro, I will take that trade. I'm not gonna run to the office, cut the cameras on, test the mic, make sure the trade's gonna be gone by then. But the morning session live streams, that's for you all. Like when we come out here, tape reading, that's for you all. But anything that I do outside of 11 a.m., anything past 11 a.m., that's me time. That's personal time. That's where I can trade without having, 500 eyeballs watching me. That's my time to just relax, make the money back that I may have lost earlier in the morning, and then there it is. But best believe I'd much rather be done with a trade in the live stream. But a lot of people say, "Oh, you took that trade off stream." Yeah, because I pay my bills off stream. I go grocery shopping off stream. It's just life. I don't like it. I'd rather go get lunch with my girl on her lunch break, but instead I'm trading the PM session to recoup what I lost. I'd much rather be done, trust me. So that's the last time I'm going to bring that up. But a lot of people kind of feel some type of way because I catch a win off stream. I gotta eat, gotta make ends meet, as ICT says. But by far and large, I'd much rather catch a win on stream, upload that footage, and be done, and not have to open the charts up later in the afternoon. So let's go back to Dow, S&P, NASDAQ taking out all-time highs. I'm looking to see if we get any signs of weakness. It's about posting a trade after the fact. I mean, somebody asked yesterday. They said, Tremaine, you in longs? Yeah, I'm in longs. What are you targeting? The same target we outlined in the stream, the triple top. It's all love, though, man. It's all love. Watch and see if NASDAQ breaks any of these lows with meaningful displacement. Dow still leading the way lower. S&P and NASDAQ, I'm just watching to see if they want to follow suit. And then dollar index, let's see what it's doing. It's really just being held in a consolidation, so I'm not placing too much weight on the dollar. It's not moving like it was yesterday morning. I can't with y'all, man. I think I got one of the funniest chat rooms. Y'all are hilarious. I think Patrick got number one. Patrick's chat be funny. I gotta have a close second. Y'all be cracking me up. There's times where I rewatch the live streams, like I rewatch these tape reading streams just for the chat room because it's hilarious. So I'm just sitting tight, not trying to force a top in NASDAQ, just waiting to see if you want to show any obvious signs of wanting to work lower. But what you don't want to do is get caught in a normal retracement because clearly we've been very expanded since the open. So if you're really zoomed in on a 1 minute chart and you kind of just do stuff like this and you don't know what's going on in the higher time frame, it's really easy to force a short. But zooming out on a 5 minute chart, 15 minute chart, okay, I'm not trying to get too ahead of the market. Watching to see if NASDAQ wants to make a higher high. We're trading inside of that balanced price range. If it works through that, then that's signs that it's still bullish. But I'm looking at this single pass up with this fair value gap and this single pass down. If we get above that, then that tells me NASDAQ isn't as weak as the Dow. And we're likely going to press into new all-time highs. but the portion that I'm looking at is really just this imbalance, which really is not imbalanced. But I'm watching this range here. And I'll keep this extended on my chart, highlight that in gray. It's just something that I'm observing visually. When are you gonna take a trade? I already took the trade. I took the trade. You just missed it. I already took a trade. I got in here, I believe. Like everybody in the stream saw it, but you just missed it. But I got in long, and then we exited right here. That was our exit right before you joined the stream. You just missed it. I'm done for the day. On camera. You just missed it, bro. It was crazy. It was going crazy. It was a whole movie. Full port. Oh, bro. I think the trade was a little over 15K. 15, 17,000. Something light. Nothing crazy. It's just, real light. Just a little something. A little shopping money, nothing too crazy. 15K across like 20 accounts. It's an average day, another day in the office type thing. Dubs in the chat. A little grocery money, just a small little, down payment on a house. Nothing crazy. It's just might head to Miami tonight, be on a yacht by tomorrow morning if I feel like it, something light. All right, so I'm watching to see if we keep that high intact. Let's take another look at S&P. Where is it at? Dow. You get people asking. I'm dead serious. We took the trade earlier. You got to rewind the stream. We were long from down here, like 1 minute before the open or so. Actually, I think we bought it down. Actually, I think we got in down here. Rewind the stream. I forget, but I think we got in like down here. I think my entry was 22,923 even, and then we just closed up here. It was a sniper entry. It was crazy. So NASDAQ just hanging around. Just hanging around. Now this is when you ask yourself, if you're in a trade right now, if you're long, if you were feeling a little bit impulsive and you wanted to buy, let's say, a fair value gap up here, chances are you may be regretting it a little bit. Or if you just wanted to buy the breakout of all-time highs or something of that sort, that is where I would always get cooked. Look, displacement, strong fair value gap, I'm going to buy it, and stopped out. Learning when you're in a deep premium to just sit still. And trading is so much more, trading is so much more fun that way. We can just sit still because you'll see everybody else lose their minds. Are we going short? We're going long? What do you want to see to go short? Wait, where are you going long? Yeah. And they're going crazy. Whole time you're just sitting back, relaxed, because there's nothing for you to do on the chart. And then tomorrow when we get cleaner price action at cleaner levels, as far as premium and discount go, you engage, take it down, and there it is, done for the week if you want to be. But being sidelined is such a relaxing, comforting feeling that's often overlooked. Being in a trade and all that, that's a nice little thrill. It's fun. But these days kind of feel like mini vacation days. You're not worried about a stop loss. You're not worried about making money, losing money. You're not stressing yourself out. You're not feeling any FOMO. You just letting it do what it wants to do, and you'll show up for the next session or the next trading day if you don't have time. Let's go back to the Dow on this screen. Been sitting still the whole week. There's nothing wrong with that. I definitely like last week when we had we had 4th of July on Friday, and then we had like no news Monday. Last week was a really light week for me, which was expected. And then this week we don't have any news drivers, so it's just one of those time periods where, and now we're pressing into all-time highs, really expanded, just open at 9:30, tear higher. Like, it's just one of those time periods where I'm more sidelined. I'm not in here pressing buttons every single day. So let's adjust this now, because our current all-time high if I'm being honest, I would prefer them to run out all-time highs one more time. It's not required, but just from like a sentiment perspective, current all-time high. Or let's just do this. Let's go to a 5-minute chart. So we have a fair value gap here. 15-minute chart. We're going to outline this and keep it on our 1-minute chart. And we'll label this 15-minute BISI. And this will give me a lot of insight on what NASDAQ wants to do. Back to a 1-minute chart. I want to see if we lose this 15-minute fair value gap, then that's a sign of weakness. If we close beneath the low, and if we fail to trade to the upper half, then that's a signature that I think can take us lower. But again, it's so easy to force a short when you're only looking at a 1-minute chart. You have to be wary of inefficiencies on a higher time frame. Yes, DXY generally moves in the opposite direction of NASDAQ. That's a low resistance liquidity run signature. If NASDAQ is looking bearish, ideally you want to see higher prices in dollar. If NASDAQ is bullish, you would want to see lower prices in dollar. Same thing with Forex pairs that end in USD. Same thing with ES, Dow. Gold is more like on its own. Gold is more of an event-driven supply and demand type of market. All right, so we're inside of that 15-minute fair value gap. Dow breaking lower, obviously leading the way lower. S&P, it's just not giving me enough displacement. I would want us to either get beneath this 15-minute fair value gap or just have meaningful displacement. We're taking out lows with wicks. If anything, I'm seeing this more as just a run on short-term sell stops to make a higher high. But should we get beneath this, then that's narrative for me. So my thought process now is anyone who has been long, who is fortunate enough to participate in the longs here, where do they trail their stops? Underneath the low here, underneath these lows here. So I'm seeing that as they're taken out of the marketplace. So if NASDAQ did want to post a new higher high, a new all-time high, then I would think that the stage is ready to do so. But if we get through that 15-minute BISI and respect the lower half of it, then our current new week opening gap, I could see that as a draw, which is down here. So far, we're staying in the upper half of that 15-minute imbalance. Nothing in here is bearish for me just yet. I'm waiting for something really specific. Whoops. Just watching this fair value gap until we get underneath the 15-minute BISI. I'm just seeing this on a run on short-term sell stops. But looking at Dow, it's still looking somewhat weak. All indices have taken out some measure of buy side, and it goes without saying we're already in a rich premium. Midnight opening, 8:30 opening. We had a gap higher at 9:30. Have you ever traded gold? I traded gold a few times. The few times I traded gold, it was during Asia, because gold normally moves pretty nice in Asia as we head into London, but that was only like maybe 2 or 3 times. But the volatility is nice, especially if it's in a low resistance condition. Gold is one of those indices where, like, when it's moving, like, it moves. It takes off pretty fast. And if you're on side, it's a lot of fun. All right, so the body's respecting midpoint of that 15-minute inefficiency. For me, in my style of trading, nothing justifies a short for me. My criteria is very defined as far as I want to see us get below that 15-minute BISI. How do you cope with if price is making a new all-time highs and you can't trade it? You just show up for the next session. If it's at all-time highs and it's too much in a premium and we're already expanded so much, and if you're not already on board, then just show up during lunch or the PM session or the final hour macro. Or if you can't trade any of those sessions, then you just have to show up the next day. Curious to see what you guys done. Poll in the chat room. I think. Where'd it go? Oh, did I do it? Oh, there we go. There's a poll in the top of the chat. I want to see what everybody's doing. So that's the displacement I like. Dow is taking out the sell side here. So trading through that 15-minute BISI, my focus is shifting towards current new week opening gap. Let's take a look at S&P, see if it's rotating. So S&P following suit. And now we'll go ahead and maximize NASDAQ now that it appears that all the indices are kind of doing the same thing. Let's go ahead and focus on this chart. So I'm watching, excuse me. I'm watching to see, do we leave this fair value gap open and do we stay in the lower half of this 15-minute buy side imbalance, sell side inefficiency? Because if that fair value gap stays open, then I'll treat that as a breakaway gap. So what could you look for as a reasonable target? For me, the easiest thing to do is you just take the obvious price leg that we're in. So this low, I'm ignoring this wick. It's just kind of just the bulk of the volume is in the body. So I'm taking this low all the way up to this high. And I'm doing this here. So equilibrium between the high, current all-time highs, and this low, ignoring the wick. Wicks do the damage half the time, like the micro would have a wick and NASDAQ doesn't, so I'm ignoring that. And then we have this BISI that rests in a discount. You have previous day's high as a draw, and then current new week opening gap, which shout out to the person in the chat room who corrected my new week opening gap. I had it drawn wrong at first. But the high of the new week opening gap, we'll just call it 22,970. Beautiful displacement, breakaway gap, staying open. It's also a balanced price range. All these down close candles here, smart money can mitigate their positions. New week opening gap is my target. That's my draw. And these are the setups that I prefer. Now, let's say I was still bullish, looking for higher prices. this is where I would be more interested in buying. 9:30, I'm not saying that's a long. That's not a signal. But I wouldn't like buying all the way up here or up here. To me, that doesn't necessarily make sense. Price working a short-term discount, perhaps run on some sell side, accumulate in our new week opening gap. That's where I would want to accumulate long positions and look for higher prices. But buying anything up here, this is where in the past I would always get cooked here. Every time without fail, it was just chasing. So now here we have our two fair value gaps. And general rule of thumb, whenever we have two inefficiencies stacked on top of each other, I'm always observing this lower one to see if that can offer resistance, and then I would prefer this one to stay open. We can trade into it, but I wouldn't want to see anything more than just a wick. So that's just something that I like to observe whenever we form two fair value gaps like this. If that's confusing, then you could just do like a 2-minute chart, and then 8 seconds, this will form one fair value gap, and that'll be easier for you. But if you ever have something like this, I would always want the lower one to offer resistance should we trade to it. If we don't, obviously that's bearish, and I would treat this as a breakaway gap / measuring gap. The fair value gap that forms in the midpoint between the high and then my anticipated target, and you also have sell side here. My TP is 22,970, which is the high of that new week opening gap. Stops at break even. Let's take a look at S&P, Dow. Dow's been leading the way lower pretty much all morning. There she goes. $1,500 on the day. Live account. Analysis shared in real time. Balanced price range. Okay, I said I'm extending that forward. Used as resistance there. Not interested in shorting until we get where beneath the 15-minute BISI. I want to see this fair value gap stay open. It's a balanced price range. Single pass up, single pass down. Entry is here. I'm not expecting this to fill in or be traded to at all, so I trust shorting here. Inside of these down close candles, that's old order flow. Short. I let everybody know new week opening gap high is my target, and there it is. So quick little $1,500. We're done for the day. I'm done for the week. It was a lot of fun, man. Hopefully y'all enjoyed this stream. We sat in this little range for a little bit, but everything outlined beforehand Was not interested in anything going higher. It was way too expensive on the day. So that was a lot of fun. If this is your first live stream, I hope you enjoyed. I do live trade in Discord every morning, 9:15. Occasionally, I come out here on YouTube publicly, and I'll do like a little public tape reading stream. And I like to laugh it up with you guys and just give the YouTube community some love. If you haven't subscribed already, our stop loss was above this candlestick's high, this down close candle. Because I'm seeing all of this as balance. So shorting here, stop loss just above that candlestick's high. Where is I at? Occasionally, I'll come out and tape read or whatnot. Do not join the Discord if you're expecting a signal service. The primary purpose of the Discord is to grow your understanding of price action. I do take losses. I do share my losses. There's a channel in Discord where I share all my losses every single morning. I share my losses on Twitter as well. So if you're just going to join the Discord to copy trades, please do not join. Keep your $50 or however much. I promise you, I do not want it. I don't need it. I swear, this is live money. Keep your $50 if you just want to copy trade. But we have homework assignments every week, market reviews. We have webinars every Wednesday. We actually have a webinar today at 1:30 p.m. So we're going to meet back here during the PM session for those who are already in the server. And we're going to cover some things in our webinar. It'll be about 30 to 45 minutes. And then we'll officially be done with the day. And I think that's it. This was a lot of fun. If you're new to the YouTube channel, please subscribe if you enjoy what you saw here. If you enjoy the YouTube content, this is kind of your first week with me. I'm glad to have you here. If you're not subscribed already, please subscribe. And this was a lot of fun. A webinar is like a virtual teaching. It's like a Zoom call. We just do a teaching class. Like we'll cover different topics for about 30 to 45 minutes, and I'll teach something regarding price action. But where is it at? There she goes. But I think that is it. So the webinar's at 1:30 p.m. They're saved and recorded. We have probably like over 100 webinars that you can go back and watch if you're in the Discord. They're all recorded. You can watch them for those who can't tune in live. So meet back here at 1:30 for those who are in the server. YouTube community, love y'all, man. We're almost at 20K subs. Super grateful for y'all. Love y'all, love y'all, love y'all. It's been a lot of fun. And for those who are already in the server, we're live trading. I'll be paper trading. I'm done for the week with this trade on my live account, but I will be paper trading in the stream tomorrow and Friday just for content and educational purposes. But I made enough this week on my personal, so I'm gonna call it a wrap there. I think that's it. Let me scroll in the chat, make sure I didn't miss anything. Let's see. Let me scroll up. Dubs. Beautiful exit. Let's see. All right, cool. So looks like everybody's good. Discord link is in the description of this live stream. It's also linked in my profile on YouTube. It's also pinned at the top of the chat room. If you're interested, pricing, all the features and all that, you could look into it. But I'm out of here. I have to get ready for the webinar at 1:30. And then it looks like we have clean price action, so there will likely be a market review after market close at 4. So be on the lookout for that. I'm out of here. We had a lot of fun. I'll see you all tomorrow. Peace.